The African Continental Free Trade Area, AfCFTA, is an agreement among 54 African countries. The agreement, which commenced on January 1, 2021, has an estimated potential of lifting 30 million Africans out of extreme poverty, boost Africa's income by $450 billion by 2035, and also increase Africa's exports by $560 billion. Despite the publicity built around the AfCFTA, the business community has called for more to be done to empower the private sector to become the hub of economic growth in Africa. As part of efforts to achieve this, the Chief Executive Officer of the Ghana Investment Promotion Center, GIPC, Mr. Yofi Grant, has assured local businesses that the center is ready to assist them to harness the opportunities that come with trading under the Africa Continental Free Trade Area. He outlined some strategic investment-driven reforms the GIPC is putting in place to help businesses harness these opportunities.
It's without doubt that the higher ends of the trade value chain are where there is value addition and industrialization. So we are not going to export our raw materials and resources as we did before. We are going to add value to them. And in that sense, we would require quite a significant amount of investment to make that happen, because the investment is not only into the companies, also the factories themselves. Because if you want to be a trade partner, you must be trading some goods and services. You must build the capacity for it. Then there's also training. So all these form the composite of what is required to make it happen in a very structured way. So we do include all these things in our investment, universe, looking for investors who are particularly keen on that. But we're now selling a much more aggressive story of actually coming to produce in Africa and helping our indigenes also scale up. For example, instead of in the textiles industry, we have spoken to quite a number of significant world players to actually come set up shop in Ghana. And then take advantage of that to export to the continent. We also will discuss with some of our European partners to actually come establish the factories here. We are proposing quite a number of things. For example, we would look at our incentive regime more structurally. At the GIPC itself, we are actually increasing our capacity for better trade investment facilitation, which would then percolate towards the trade infrastructure.